The FTSE 100 has started the day on the back foot ahead of the Bank of England's decision on interest rates. The blue chip index slipped 0.1% to 7,441 points. It's after the bank was forced to admit that inflation will be much higher and last much longer than previously thought, as it increases interest rates for the sixth time in a row. A rally in stocks cooled in Asia as investors assess the corporate profit outlook, while wagers on further Federal Reserve interest rate hikes supported Treasury yields. MSCI Asia Pacific share gauge added about 0.5%, helped by a climb in Chinese tech companies, propelled by Alibaba Group Holding Limited, ahead of its quarterly results. The region's performance trailed a jump of more than 1.5% in the S&P 500. US futures dipped, and a global wave of monetary tightening also hangs over the outlook. Consumers in the Eurozone are bracing for the economy to shrink and for high inflation to continue eating into their income into the next year. That's according to a European Central Bank survey. The Consumer Expectations Survey, used by policymakers for input in their deliberations and published on Thursday for the first time, showed households were beginning to lose faith in the ECB's ability to bring inflation back down to its 2% goal. The poll, carried out in June, showed the median consumer expected prices to grow by 5% over the following year and saw inflation at 2.8% in 3 years' time. This compares to expectations for nominal income to grow by 0.9% and spending by 3.9%, implying a large dent in households' ability to save. And UK retailer Next has posted a surprise jump in sales as it cashed in on the heatwave and renewed demand for formal wear as weddings returned. The high street retailer said full-price sales were up 5% in the second quarter, £50 million ahead of previous guidance. It had expected sales to be down compared to pre-COVID levels. Next said the first half of the year was driven by a reversal of pandemic trends, with shoppers flocking back to the high street and online sales returning to normal. Unusually warm weather and pent-up demand for social events boosted trading, while Next said it had also benefited from large numbers of closures of rival stores over the last 3 years. And those are your main stories from London at close of business.